Morning. This is Van with Level 8. It is July 17th here for the pre-market analysis recording. We're in the Discord room also, guys. If you're in the Discord room, bear with us while we do this presentation. All right, let's go to our charts here. I've got everything piled up on one monitor so I can switch to it. Guys, we're down on both indexes big. 2% on NQ, a little over percent on ES. There's no, it's no surprise we have lower value accepted and likely bearish on both indexes. This is the previous volume profile from yesterday, and obviously it talks about accepting value. That's part of what it's talking about, but we're big time below yesterday's entire auction here. There's yesterday's low and high, etc. So from a structural standpoint, there's not much mystery in this call. This type of move down like this, though, we may expect to see some rebalancing to the upside at the open because of how far it's moved. So, ES is down 84 points. I mean, and if we were to go look at the expected move on SPX, we see it's 50. So we've 50 points plus minus. We've moved down more than the expected move. Many times when we see this, we'll get a little rebalancing right at the open to the upside, but we'll be looking for the bears to reappear at some point after maybe in the 10 o'clock hour there. That's what we're saying. This is described as a risk-off environment, guys. So usually we see prices move in the same direction as these treasuries, unless we're getting this type of rotation, this fear in the market. So what's happening now is that they are rotating out of equities, which are risky, into these fixed return products, notes and bonds. So definite fear in the market today. That's what's driving it right now. We'll see how it plays out. VIX is up 14% to 20 at this point. So that's a little bit elevated. 17-ish would be normal. So now we have elevated VIX. We're going to see some big volatility. And guys, we're really likely to see a negative gamma environment today. And that means that the options dealers are likely to reinforce big moves, particularly to the downside, because this is the environment that they fear. They chase price in this environment. So we can see that in the bar chart model. Let me get that up. I didn't do that starting here. This will have SPX. Interestingly enough, we've got okay, so we've got the current price. This is as of the close. So their last price was 75.33. We're going to be down 60 of that. We're going to be like 74.70 down here. So big price. We will have moved into the negative area there. The other model we might look at for the Qs here. This is probably going to make me log in. Go to 0DTE and just get a look at this. It's not as bad as it's actually not as bad as what we're seeing on SPX, but any movement down, we start moving into more negative gamma. You can see how it starts piling up, and that's what we look at. We've got some spikes here that we could really pay attention to if we had NQ. Our NQ models in development. We'll start having numbers on NQ or MDX later on. They're hard to come by now because of how NVX is so thin. You have to model it based on other things. So that's where we're at in terms of news. Tell you what, let's just go look at the playbook. All right. That's not the one I'm wanting. Let's do this one. Retail sales were down, weaker spending. That is a negative. We have some initial job claims here, jobless claims. They were down, so we have, we still have a resilient, labor market, and they, they're still. The thing that the weirdness about a lot of these economic reports is that in one sense they're good for business or bad for business, in the other sense they feed into expectations of how the Fed is going to do, what the Fed is going to do with rates. And that is certainly from an NQ standpoint the biggest factor. The biggest macro factor we look at is how these treasuries are moving. And so in this case, it moves against cuts and it's negative. So good for the economy, negative for maybe the way people look at NQ. Nothing really happening of any kind. I haven't seen anything down here really affect any micro structure that we've done in the past. There's tomorrow's catalyst we look at for power hour. There's looks like there are some treasury auctions tomorrow and geopolitical headlines. That makes perfect sense. Lower yields, jobless claims, easing expectations. There's really nothing here for this thing to point at, honestly. They're looking for a mixed to flat open. So we might get some rotational behavior here, or it might, as we talked about, it may move up a little bit as they rebalance from that big move down. And as we get into the explanation of yields and breadth driving MDX, and we'll talk about that more. So the market regime is rotation and repair within a broader uptrend. So definitely a little bit better than different from what we've seen for the initial read. It can change though, it can move up. So they're looking for maybe a ranging move up a little bit here. This is I'm talking about the AI model. This is AI. That's what we've got there. We can get you can get this playbook inside. Get on Discord, and we'll start putting those playbooks in the playbooks channel there. So that's kind of what we're looking at, guys. We don't have. We can go look at these. Look at these larger time frames like we like to do. Here's a daily. You can see we're coming down here into some support back here into June. So looks like pretty strong support there at 248. That's a ways to go, but if it really fell out, we could get there. We've exceeded that one, so that's on the daily time frame. The 4 hour is going to be a little difficult to analyze today because we will have blown through everything there also. So not necessarily any levels to the downside we can point to right now that have been like tremendously reactive in the recent past. We've gone through all of the levels that we would look at on the from the daily standpoint. So there's 5 days. Here are 5 days worth of highs and lows, and we've dropped into a new range. Obviously, there was a pullback here in the middle of the morning there. Let's take a look at that. It was a mild one compared to what it could have been. We use fib, and that would not have been a very big pullback in the context of that drop. And we were dropping, obviously, coming into it yesterday. So fear is in the market. That's the story. We're going to see how it plays out. We trade the micro structure anyway, so we can make our money in both directions. But in general, we may look for pullbacks to the upside and more edge to the downside. And that's what we're going to be talking about right now. For YouTube, I will say, if you like this content, like and subscribe. go to level8trading.com, get into our Discord channel for free. You can see some of the things we do in the NQ room, see how we trade levels, see how we work with our Level 8 workspace. And we'll be back for a post-market recording wrap up later in the afternoon.